it's this kind of period here where we should be turning up and seeing the acceleration point. Did we play catch up? Most likely. So it feels that, yes, there's been a slight lag. Is there any major structural issue there? No. Also, this is Bitcoin. And as we know, dominance is going down. So dominance changes this somewhat, because what we're going to see is the other assets doing it. There's the Bitcoin dominance chart. It looks to us like it's forming a head and shoulders top pattern, which would break lower. That would be very typical of this stage in a bull market. And in which case, things like global M2, Bitcoin won't track as well, but the overall space will track it really well. And you'll see the acceleration of assets. So we've had ETH as the main beneficiary, which makes total sense. A, everybody was massively underweight. And B, suddenly the entire world is building on top of ETH rails, which is what I said would happen. Is like the financial industry is, they'll choose Microsoft over Apple every time.
Raoul starts with a clear signal. We're entering the next phase of Bitcoin dominance, but the spotlight is shifting. Ethereum is catching up, exactly what seasoned investors expect in this rotation phase. By the way, if you're enjoying this breakdown, make sure to like the video, subscribe, and drop a comment below. It not only helps the channel grow, but also signals to the algorithm to share this content with more people like you. Let's continue. When Ethereum gains ground against Bitcoin, it often sets the stage for an altcoin surge. It's classic crypto cycle behavior. First, capital flows into Bitcoin, then it rotates into Ethereum, and finally, it cascades into the broader altcoin market. But this time, there's a macro trigger at work, too.
I think the next phase of Bitcoin dominance, we're seeing the ETH rotation trade. That's good. The catch-up is happening. Okay, once it gets into kind of mid-value versus Bitcoin again, then I think we'll see the rest of the space utterly ignite. And as we know, once you throw in a lot of liquidity into lower free float things, they go up more. And that's how it always plays out. And that's where we are in the cycle. Now, one of the things on the macro side that we look at is the influence of the business cycle on that particular trade. And it's the same trade you and I have grown up with in markets, is earnings have to go up for people to go further out the risk curve. So when the ISM picks up properly, the business cycle picks up, corporates and people earn more. And what we find is, in the bond market, it goes out to junk, then out to emerging market junk, and then out to private credit. We see small caps outperforming big caps in equity markets. We see all of this, and it's the same with the altcoins. The issue is everybody thinks their altcoin should go up. That's the issue. Is it's like everyone's like, well, mine hasn't gone up, so therefore this is all wrong. It's like you need to have the right altcoins, and I think people mid-curve it. They get so involved in the value benefits of their particular token, when really there's one simple thing: is go onto CoinGecko or CoinMarketCap and look at crypto. And we've talked about this. It's like, I'm sorry, but people are going to buy XRP and Doge and Cardano, whether you like it or not, because they're cheap. In the absolute term of how much you pay for a token. So people will do that. The alt layer ones that are getting absolute network adoption, Solana, Sui, few others, great. And then somewhere in the middle, we'll see what happens. But I think the middle part is the harder play. Hey, I've got this DeFi token that could be amazing. That's pretty hard. There's some idiot-proof ones, which is big layer ones that get adoption, go up a lot, and they're less risky. And the moron trade, which is always a good one. There's the M2 chart. This was out. I think Julian put this out a couple of days ago. And it's lagging a bit, but it has these leads and lags. We shouldn't expect it to completely follow squiggle for squiggle, because in which case it's just doing debasement and not network adoption. But it's this kind of period here where we should be turning up and seeing the acceleration point. Did we play catch up? Most likely. So it feels that, yes, there's been a slight lag. Is there any major structural issue there? No. Also, this is Bitcoin. And as we know, dominance is going down. So dominance changes this somewhat, because what we're going to see is the other assets doing it. Now, if I can show you, let me stop sharing this one, just show you the Bitcoin dominance chart as well, just for completeness. There's the Bitcoin dominance chart. It looks to us like it's forming a head and shoulders top pattern, which would break lower. That would be very typical of this stage in a bull market. And in which case, things like global M2, Bitcoin won't track as well, but the overall space will track it really well. And you'll see the acceleration of assets. So we've had ETH as the main beneficiary, which makes total sense. A, everybody was massively underweight. And B, suddenly the entire world is building on top of ETH rails, which is what I said would happen. Is like the financial industry is, they'll choose Microsoft over Apple every time because that's what they do. You don't get fired for building on ETH. So Robinhood, could they have chosen Solana to build on? Yeah, but they chose an ETH layer too. Kind of because that's what, as you and I know, go into any single investment bank or hedge fund on earth, it's all Microsoft. I've had this everything code thesis for quite a while now, but generally speaking, the crypto space has understood debasement of currency versus inflation, which is what TradFi thought of. And we've been on this trade saying they need to refinance the debt. That's the whole everything code thesis. And here is Scott Bessent coming out saying publicly, we need stablecoins to refi the debt. Trump saying we need the Fed to cut rates because we need to refi the debt. The whole game is now open. They're telling you what the game is. And there's still a lot of TradFi people who don't want to understand it because debasement's not a thing that was taught at university. What beats the debasement? Debasement's about 8% plus a bit of inflation, whatever. So call it 10, 11%, 12%. Well, the S&P does that. So that doesn't help. Gold does a little bit less, so that doesn't help. So you've only got actually two assets in the world that outperform the debasement of currency. One is technology stocks and one is crypto. When you divide the NASDAQ by Bitcoin, it's down 99.997%. So it's like, okay. Then when you put the correlations of the long-term drivers of the asset prices, 97.5% of the NASDAQ is explained by debasement, liquidity, and 90% of crypto. So you've got the largest dominant factor in the history of macro markets over the longest persistent period of time since 2008. So you basically only need to care about one thing, that. And the other side is how fast is it being adopted, which is why it outperforms the debasement. So in which case you've got only one macro factor that matters, which is why I keep saying to everybody it's all noise. Whatever it is, fucking Israel, China, nobody cares. Nobody cares because it's 90% of all price movement is explained by one factor. And then so just
you must
if
get
that's
really
the case,
bored
just buy
going
one
on these-
asset.
Now, here's where it gets interesting. While everyone's chasing tokens, NFTs, especially top-tier collections like CryptoPunks, have been crushing it. Raoul points to data showing NFTs up 3 to 5x in ETH terms, while ETH itself has tripled in dollar terms. That's a compounding effect few spot early. Why? Because in every cycle, wealth flows upstream.
Look, I've never had an issue with ETH, and yes, it underperforms over periods in time, but it was like, this is the core foundation stone of Web3 is ETH, and everything else kind of builds around it, Bitcoin being a separate beast. So what I had done is, we've talked about this before, the second cycle trade where somebody's got Lindy effect and you buy it, which was Solana at the low in 22, is usually the best trade of all because it's kind of been de-risked. And then people have the light bulb moment, which they're having again with ETH, right? But ETH has gone through that Lindy effect in the past. This was happening to NFTs. And I talked about this for a while. Nobody understood what the fuck I was talking about. And I'm like, this stuff is survived the Lindy effects. There's a group of collectors who passionately care about Xcopy, Beeple, whoever it may be, Sam Spratt, all of this stuff. And that this stuff is likely over time, as the wealth in this space, I think it goes from $3 trillion to $100 trillion over the next 8 years. That'll be the largest accumulation of wealth in history. And wealth always flows upstream, and art is the top of the pile. Even if you go to an art collecting billionaire, they might have 5 houses. After that's hard to manage. But in those houses, they have 10 times the value of the house in art itself. Right? So it has always been a proven store of value. And so what we're seeing is as ETH goes higher, the prices don't adjust down, which is what people thought happens. What actually happens is wealth creates demand for this stuff. So this stuff is ripping. And, I think the stuff that I started buying in 2024, early 2024, is up between 3 and 5x in ETH terms. And then ETH is up another, whatever X, depending where you bought the NFT. So they become this massive multiplier trade. And I'm going to show you a chart on this because I put it on X yesterday. But look, the chart I'm showing now is the chart of punks, which best represents the space in dollars. And now I've actually got a longer term version somewhere. Actually, I've got it here. In fact, I'm going to share that as well.
I never knew that you could find CryptoPunk price on TradingView until today.
And at GMI, we built a whole model around it. It was in RV Pro Macro as well. A whole model about how to value this stuff, how liquidity drives it, how it fits into the business cycle, the whole macro overlay. So here is this chart as you've never seen from anybody. This is the punks chart long term in dollars. I mean, you'd be buying that all day, right?
In dollars, that must be in K, right? In thousands of dollars.
Yeah.
Yeah.
So we're currently at $200,000 floor. Look at this chart that I'm sharing now. This is punks in ETH. Now, from last year, when was that? August 24, when we had that correction that started the banana zone. These things have outperformed 3 to 4x ETH. And ETH was down and ETH is 3x from there. So it has been the trade, really, of the cycle. It might have even outperformed SUI and stuff now. I'm not even sure. But, people were saying, well, do punks and Bitcoin trade 1 for 1? But punks are so scarce, really. And considering a bunch of these are locked up in DAOs and, Yuga have a bunch, Mickey Malka has a bunch, there's very few to be able to buy. And if you want them, it's available and good. You're going to pay up for it. So you're new to crypto. Welcome to crypto. Oh my God, Bitcoin, I can't buy that. It's $116,000. I can barely afford lunch. Ethereum, well, that's pretty expensive. Oh, but XRP, I've heard about that. I saw some videos on YouTube. It's $3. BNB, well, I don't really know what that one is. Solana, $175. Oh, but Doge, Elon likes Doge. It's 22 cents. And Cardano, I've seen tons of videos. It's 78 cents. You can see what happens because we've all done it too. So that's my general thesis, that the anchoring bias of price is a real thing. And look at the top 10 because you think you've de-risked it.
To wrap it up, Raoul points to a simple behavioral truth about retail investors: anchoring bias. Newcomers don't ask, which token has the best tech? They ask, which one can I afford? So, when Bitcoin's sitting at $116,000 and Ethereum's over $6,000, they shift to XRP, Dogecoin, or Cardano because they've done deep research, but because they've heard of them and they look cheaper. That's why the top 10 coins by market cap matter. To the average buyer, they feel de-risked. And in markets, perception often drives the first move. If you found this breakdown useful, you're going to want to check out the next video. It dives even deeper into how these market psychology patterns play out during bull runs. Click here, and let's continue.